Hey guys, welcome back. This is Sandra with Trading Made Simple, and today we're going to talk about Lotto Fridays and what do we do with that information? How do we get ready and prepped for the next day? And I want to know, after I tell you what I do, I want to know what you do because I may be able to learn something from you that would be good for me as well. So, the first thing that I want to talk about is okay, you get the list. It's usually Thursday night and you get your list and you get you actually get the charts. And so the first thing that I do is I look over the charts because I want to identify from my own info because I want to learn and see what he's or he or she is. Is this a breakout pattern from a trend line? Is this a falling wedge? Is this a flag pattern? Those are the things that I'm trying to identify so that I can be a better trader on my own as well. Because it's always nice to get lotto plays from someone else, but you'll learn soon enough that without your own prepping and analyzing and creating your plan of action, it's not going to be successful. Even though you have some great plays, if you don't, if you don't, if you're not diligent with your plan of action, things can go awry and you could lose money. I mean, that's just the name of the game, I think. So, this is how I create my plan. I look at the charts, I look at the targets, and then I analyze that. So, for Apple, I'm so sorry this is unclear, but for Apple, as an example, your buy-in was like at 126 something, and your first target is at 127. So, that's not a very large spread. So, I may want to analyze that a little bit. And so for Neo, same, I want to look at the first target. Now you'll notice that there's only a couple here that have a second target. Lotto Friday, it's a lotto, it's a gamble, it's risky. So I don't mess around with the second target. I just go for the first target between you and me. Now there's six here, and you know that not all six are going to activate, right? They only activate if it gets to, as an example, he may say, okay, Apple calls 126.16, puts 122.25. So when it gets there, you know what you're going to be doing. 126.16 and over, calls. 122.25 and below, puts. Same for Amazon and Microsoft as an example. And so what ends up happening is you get that set up in your charts, or I get that set up in my charts. So I go, right into the chart. I take a look to see what he's doing. I take a look and see what my own support and resistance is, depending on, what program I have running for that, Darvis Box or Woody's or whatever, trend lines, etc. And then I start to make alerts. So I go right in here. If you don't know how to do that, you just go right in there and you say create an alert at or, above the 126.16. I'll put in Apple calls because you're going to have probably 12 alerts. So sometimes it just makes it easier to put in the notes so you can read that when you get it. Hit create. I do the same thing for the puts, at or below, put in the price, Apple puts, and I do that for all the stocks. And then the next thing I do is I take a look at what the targets are. So if the target is like, 127.34 or whatever, I kind of look at that on the chart, and sometimes I will create an alert just so that, I have it in there, or I'll go and I'll make I'll make the trend line, I'll make the trend line wherever it needs to be, so that I know. Okay, so that's another thing that I do. And then what ends up happening is I will then go in and check to see how the calls look. So, what is my strategy? Am I buying calls? Am I buying a vertical call spread? Like what's your option strategy? Are you going to go in and buy the stock because you don't like the option? And do it that way. I mean, it's really your discretion. So once I go in, I take a look. Now, the funny thing is when I didn't have a plan of action, I just felt like, and I don't know why, a lot of stuff just was like, well, because of course I wasn't, professionally trained or anything. I didn't know that delta is okay. So that's the amount of money that you're going to make if the stock price goes up, and that's the money you're going to lose if the stock price goes down. So if you're going to buy an at the money call as an example, but you didn't know it's $33 if it goes up a buck, well, that was Apple's target as an example. Is that what you were thinking? Because when you look at your monitor tab and it says you got $33 or $30 in your account, and you're like, well, that's not enough. I want it to go to $75 before I get out. Well, guess what? You're going to lose $30. You're going to lose the profit that you made. And then you're going to be under. And then you're going to hope that it gets back. And when it finally gets back to 30, you're going to still say, I want the $70. And you're going to do this stupid thing in your mind. So, but if you know, oh, okay, so my profit's $33 or $34. So you can make the decision. Do I want a 34 delta call, or do I want a 53 delta call, or a 71 delta call? So, I typically buy the 50s and the 60s. In this case, like a 70. I mean, it's very cheap. The other thing too that I'll do is, if I want to buy the 33s, maybe I buy 4 of those instead of, a 70 call. But you can see how you have some decisions to make based on your risk and what you want your reward to be, right? The other thing is some people on Lotto Fridays will buy these. These are super cheap, out of the money calls. And if the stock is really moving and it gets into the money, which is in this shaded area, you can double, triple, quadruple your, if you bought it for $3, you could make $6 off of it, or whatever, 60 cents, and say you made, 100%, right? Of your, and sometimes you see that, you get a lot of tweets and pictures of, oh, it went up, a percentage amount or whatever. Well, okay. And I take that all with a grain of salt, because I think once you start getting in and out of certain plays people are offering, you're going to figure out, based on your plan, if you're executing that properly or not. And then you're going to scratch your head and go, well, why are they getting that percentage return and I'm not, as an example. So I don't really, take that for granted. To me, it's more helpful, but this is my Virgo brain. It's helpful if someone says, hey, I bought 5 calls, and give a screenshot of the 5 calls, and they closed out the trade, and you can actually visually see that. So what I do is I want to visually kind of already set that in motion. So if I say, okay, I want to buy these calls, the 53s, I want to go analyze it. So I get over here to the Analyze tab, and I make sure that the dates are proper. Of course they are not. What is that? That's a June 11. And then I want to take a look at that and say, okay, so if the stock's supposed to go up a dollar, okay, so I'm looking at like a $65 profit. So I kind of mentally want to say, okay, I want to see, well, do I want to buy 2 of these? So that, when it goes up that $1, I'm at 126, that might be worth my while. I mean, your time is worth money here. And then I also want to know, well, if it goes down to 126, like, what's my breakout point? What's my, like, I have to sell this because my timing's just not right. Yes, it hit the level that we were supposed to hit to get in, but that doesn't mean that it's going to be a winner, right then. It could go down, and you could be down $150 if you wanted to hang on the rope, right? And then maybe, it'll go back up. So that's the weird thing about options, is when you see that negative loss in your monitor tab, sometimes it can kind of shake you out. That's why they call it's a shakeout. But, I always think to myself, oh, they're just trying to shake me out. I'm going to stay in it. And then when I stay in it, I go, Sandra, you have a plan. Like, follow your damn plan. And so for each play could be a little bit different. Sometimes I'll say, oh, if I'm willing to make on these two calls, if I'm willing to make 130 bucks, then maybe I'm willing to lose $60, to make that play. And if I get the timing wrong, well then I'm out of that play for 60 bucks and I will wait for a new entry and I'll keep my eye on it because there will be a new entry to it. And so that's kind of how I kind of look at that. So you're going to have to kind of judge in your mind. Are you going to go down, $1 in the stock price, $2? Like, what's your risk tolerance for that? Are you willing to go, all the way, lose the whole thing, $176? A lot of people say that on a Lotto Friday, you got to be willing to lose the whole thing. Like you're on the roller coaster ride. You're going to lose the whole thing. You have to be willing. Well, it's really up to you, whatever your risk tolerance is. I'm usually either like 50% or 20% of whatever I'm spending. It's usually between 20 and 50%, and it all depends on how many calls I bought and what the price of the stock was, and how much it cost me to get in, etc. So you'll have to make your own plan for that, but stick to it. And then so I'll tell you what my problem was is I would get into a play like that, not know that my profit was going to be $30 and wait for the $75. And I kept losing that. And I just kept thinking, what am I not doing right? Well, I wasn't doing the homework. I wasn't doing the resistance and the support levels. I wasn't paying attention to, when I should get in and when I should get out. Because using Apple as an example, if you got in yesterday at the entry, right? This morning, it hit the profit target. But do you think that you would have been able to get out as a human being on that wick right there? I understand a lot of people say, oh, I don't want to create a stop for the bot because I don't want to be stopped out and then it go right back up. And I totally get it if you're sitting at your computer. But when it comes to the profit target, in my opinion, I make way more money than I ever did just by doing that one thing. And it took me years to figure that out. So when you do your homework and you know what your profit target is, if the resistance level is 127.76, I always put my stop profit target taking at like 127.5 or, I always do it right below because I like the momentum going up. Your premium is, you get more bang for your buck as it's going up versus it staying there for a second or two and then start to come down. So I program the bot right below the resistance level so that I'm getting my stop out as that's going up. My premium is actually enlarging. And that only comes with, time and experience when you figure that out. And of course, you know how you learn from experience. It's always the hard way. Okay, so let's say this would have been me years and years ago. Okay, I'm waiting for my 60 bucks. I got 30 bucks. I hit my target. I didn't even know it. And so what ends up happening is if you hit your target this morning, guess what? It kind of went down to almost the entry price, and you could have went right back up and made another 30 or 50 bucks, right? Depending on which Delta call you bought. And then if you programmed your thing at around the same level or a little below if you're not too greedy, and then guess what it did? It went right back down again to another support line. And what did it do later this morning? It went for 3 times it hit this. And then finally, it broke through 1030. Now it's back down again. So you could see how the ebbs and the flows, ebbs and the flows. So what I would do is I would hang on and go, okay, I'm not going to get out until I hit the second target. And so what would end up happening is okay, so I was up 50. And then I'm down to 50, probably plus another 10 or 20. Then I'm upset. Then I'm still waiting because I didn't get out over here. And then all of a sudden, I'm still down and my option is deteriorating. when really I could have got in and out of this play 3 times and made 150 off of one call. So just want to give you a different perspective of how to look at that. And that's why they say take your profits fast. Take them fast. Don't go for the second target. You could probably, just like you could have played this 3 times today, you'll be able to do that. So the other thing too is like I have rules. Like I don't play the market. I don't trade the market when there's no oomph in the market. I just can't do it. There's just too much theta decay on my options, and you don't really make the amount of money that you want to make versus if this was a normal day. So when everything is sticking around its strike price and there's no movement, there's a little bit of movement on TSM, that's good. I was going to put Tesla in here. That's always a good example. $3 for Tesla. It's just not, it's not enough juice in the market. The volume's just not great enough. So because of that, that means that theta is working against you. And theta basically is the amount of money lost during each day of that option life. So just like we know on Delta how much money we make off of $1 movement, and theta is how much money you're losing when you are sitting in an option and it's not doing anything. And those short-dated calls, they deteriorate quick. So if you're doing swing trading, you may just want to, just a different strategy. You may want to, buy them like 20 or 30 days out. And yes, they're going to be more expensive, but if you have your stop loss in, then you have your stop and your profit-taking target in, then yes, it costs you $272 to purchase it, but the value, will remain longer because it is a little farther out. That theta won't smack you so hard like the short-dated calls. Okay, sorry I got off on that tangent. So what else? Some people like to purchase on the short-dated calls for Lotto Fridays. They like to purchase the out-of-the-money cheap calls right here. But, this is good for if you can identify heavy volume, a breakout, like a 3-4 bar breakout, the RSI is going up, like everything, the big wave is flowing. You need this to flow all the way up into the money. And yes, you can make 3-4 times, the amount you paid for it. But, if you're paying 9 cents for it, $9, and you made $20, that's great. But, you have to decide if that's worth your play. If you're interested in doing that, that's everyone likes a different type of play. So one of the others, I wanted just to share one of the symbols on the list was Amazon, and Amazon's expensive to buy. So let's go. I want to just talk about that strategy real quick. So Amazon, some people will say, well, I don't even want to get into Amazon. I got to spend $2,000, just to get into the play. And Amazon can move. It can move, $10 in a millisecond. So it can move $10 up to be in your favor, or it can move $10 down and smack you across the face. So another strategy for these larger stocks is a vertical spread. So I don't know if you know, I'm hoping that you do, but there are like 10 different types of option strategies that you can utilize for different types of markets. And this one, the vertical spread, is basically just like a call, but you come right up here. And so instead of a call, you're going to say vertical. And if you do an at-the-money buy, then let's take a look on the graph, because what it's doing is it's buying one and it's selling one at a different strike price. In here, it's a $5 wide Amazon vertical spread. And you can see here on the graph, if that's 3294, So if we went up $10, you're in profit $36. If it goes down $10, 3293. It goes. Oh, I got to move ever so slight here. Okay, then you're down $30. So on a stock like Amazon that goes up and down $25, you can make a little bit of profit there, right? That's for one call, and it's going to cost you $235 to purchase it, but you don't have the you have the theta decay, by the way. You do have the theta decay, but you won't have the amount of risk that you would have if you bought a call on this expensive stock. So a lot of people, use vertical spreads to play a stock that is extremely expensive, as well as just, income generating. Usually you would purchase a 30-day out. If you were swing trading, you would purchase a 30-day out. Let's take a look at that for Amazon if you expected it to go up. God, my mouse is just awful. Okay, so here's an at the money, and we're going to analyze that so we could take a look. So you could see your profit and loss graph here. Let me just make sure. Oh, and you know what I didn't do is, so this is correct, and this needs to be July. Make sure you get your dates in there right. Expiration and today's date. I thought today was Wednesday. Isn't today Wednesday? Yes, the 9th. Okay. Why does that say 10th? There we go. So is it the 10th? No, it's the 9th. So what you do is right in the middle here, this is a longer dated vertical spread, so it's a swing trade. And so, now if it goes up $40 as an example, somewhere thereabouts. So you can see how you can make money. Now, the interesting thing about this is that within 30 days, if it expires on this side of the graph, you get the full 252. Do you see that? You get the full 252. And then if it expires on the opposite side and you let it expire, so if it got on this side and we sold it today, you see it says you'd be down $94 versus $248 if you let it expire. So that's the difference. And then, of course, to see theta work against you, or if you were selling it before you, but working it against you, you could see, okay, now a week has passed. How does that look? So you can actually then create a strategy with a vertical spread. And again, that's buying a vertical spread. You know what? Leave some comments if you want me to do an episode on that, and we can get more into it. So that's basically what I do for not only the week's watch list, but I also do that for the Lotto Fridays. And, that enables me to get in and out of the trade very quickly and take a small profit. So it behooves you to know exactly what your plan is and what your loss is going to be, that you're willing to give up, and take that profit, because it's important. If you let that thing ride because you're expecting something bigger, you might be disappointed. All right, guys, leave some comments. I'm curious to know what you guys do for Lotto Fridays and stuff. And I hope you enjoyed today's episode. We'll see you on the next episode.